multi-timeframe analysis for better entries and less risk because we can place the stop loss closer. A really powerful topic, that's why it is the topic of this video, so let's start right away. Multiple timeframe analysis is a really powerful tool because we can reduce the risk while at the same time making trades more precise. So the idea is really to observe the price movements for an asset in different time frames. So in the higher time frames, like we have here, the 1-day chart, we can identify the overarching market direction. Like here you see we have a strong downwards trend, but then we have a reversal, a big impulse upwards, and then the market is indecisive for a short time and then starting a downwards movement. So right at this point here, we're still in a downwards movement, and we can see here there is a support line. So let's see if the market goes through or maybe reversing at that point. And in the shorter time frames later on, we will look for the exact entry points. And it's really no matter if you're following a trend trading system or maybe trading against the trend, trading a reversal, there's no difference in analyzing on the different time frames. So it's working for either strategy. But what you should consider is that the time frames that you take a look at shouldn't be too similar. This is not always informative or sometimes even misleading if you are looking at the charts that are too similar. So therefore, I would recommend to choose time frames that are at least a factor of 4 apart. So for example, if you want to trade the 15 minutes chart, to look at the 1 hour chart and the 4 hour chart would fit because it's each factor 4. But of course, it can be higher than factor 4, for example, factor 6 as well. You just have to see which works for your strategy best and for yourself as well. What we have here is an example of different trading styles. So as a swing trader, you usually analyze on the weekly chart first and then go lower to the daily or 4-hour chart. And in intraday trading, usually starting out with the analysis at the daily or 4-hour chart and then starting to look for entries at the 30 or 50 minutes chart, and the classic day trading on the 1-hour chart and then entries at 15 or 5 minutes, and the fastest kind of trading, scalping, analyzing at the 1-hour chart first and then going to 5 or 1 minute for trading entries. But please guys, this is nothing for beginners. It's a fast moving chart which makes traders usually really nervous and get emotionally really fast if they are not prepared. So this is for pros only. But that's enough for the different techniques. Let's continue with our trade analysis. We started out here at the daily chart and we analyzed the ongoing downwards movement, and of course compared to this upwards impulse here, we see that the downwards movement isn't that strong. The pullbacks are always coming really high, but we're still making lower lows and lower highs. So the downwards movement is still active. But we're here in a downwards movement, which is coming close to this support area here. So let's jump down to the 4-hour chart to draw in our major support and resistance areas that may be important for the further movements of the market. On the upper side, we have here, of course, the last highest highs and, of course, the last recent high, which the market each has reacted to several times already. And, of course, on the downward side, we have this support and resistance area here, where you see the market has reacted to as support to it before, but also as resistance. So it's a really strong level that we should really pay attention to, especially since the market is coming really close to this area right now. And if we use the Fibonacci retracement from the last low to the last high, we can also see that we are in an area around the 50%, now narrowing the 62% pullback line. So if this is going to be a pullback, it's probably going to end here and reversing the trend, which would be also matching with the support and resistance area of our analysis before. So people, this is really an interesting area. So let's jump a time frame lower to the 1 hour chart and see what happens here. I zoomed in a little bit, and what we see here at the 1 hour chart is a great and beautiful bullish engulfing candlestick pattern. So right here at this point, we are having the support and resistance area from our multi-timeframe analysis, which is a strong or could be a strong support here. We have also the confirmation that if the trend is reversing, then it's probably going to happen at this point, because we used the Fibonacci retracement and then it is matching with a bullish engulfing candlestick pattern. So we are going to put an entry and trade this reversal. So we are entering the market right after this bullish engulfing candlestick pattern. I will zoom out a little bit. So we're placing the stop loss below this support and resistance area, but you see the market has reacted to this area before. So let's place it below this area as well. So this should be a good position. And then we put the target up here since it was the last high, so a little below the last high. But we don't want to exit the whole trade here. We work with at least 2 targets, because since we are trading a trend reversal, we want to catch the whole upwards movement of the new trend as well, or of the new possible upwards trend, of course, because in trading, you never know. You can do your analysis exact as possible, but you can't do fortune telling. That's it for this video. I hope you enjoyed this one and know now how you can use the multi-timeframe analysis for your trading, because first we get better entries because we know exactly where to look at, and of course through this analysis we know what the market does and that we can place the stop loss right here and not, for example, below the last low, which would make the position a lot more risky and of course would reduce the risk reward ratio. So you see, multi-timeframe trading is a really powerful tool. Check it out how you can use it for your trading. That's it for this video. See you next week with the next video. And if you can't wait until then, you find below this video the link to my Telegram group where you can trade with me and learn a lot more about trading. So see you soon. Bye bye.